Let's do an example of using a perpetual inventory record to record purchases and sales under the LIFO method. For this example, we're going to be Kylo fashions, and we're only going to focus on one particular item that they have in their inventory, which is item number 153, navy blue pullover fleeces. For item number 53, these fleeces, Kylo is going to begin August with 2 of them in inventory, and these fleeces cost $35 a piece. On August 5th, they're going to purchase 4 more at a price of $36 per unit. On August 15th, they're going to sell 4 of these fleeces for $70 each. On August 26th, they're going to purchase an additional 12 units of item number 153 at a price of $38 per unit. And then on August 31st, they're going to sell 10 more of these for $70 a piece. To track the value of the inventory that we have on hand for this particular unit, item 153, the navy blue pullover fleeces, and the cost of goods sold that we're going to record on each sale, we're going to need a perpetual inventory record. We're going to start by filling in our header. For this example, we're going to use the LIFO method. The inventory item number is item number 153, and again, they are navy blue fleece pullovers. Let's start with what we had in beginning inventory when this month of August began. In beginning inventory, they had 2 units, so we'll put that in the quantity section, the quantity column of the inventory on hand section, at a unit cost of $35, which means the total value of the inventory that they had for item number 153 going into the month was $70. Now let's account for our first transaction. On August 5th, they are going to purchase 4 additional units at $36 per unit. Well, we can throw that in the purchases section. So our quantity of purchases was 4 fleece at $36 per unit, which means the total cost of that purchase would be $144. Now we have in total 6 units in inventory, but they have different cost bases. Some of them are $35 fleece, some of them are $36 fleece. So how do we track this? Well, we're going to what they call layer our inventory. We're going to start by bringing down the inventory we had on hand before the purchase. We had 2 units with a $35 unit cost and a total cost of $70. That's layer 1. Then for the new units that we just purchased, because they have a different unit cost, we need to create a separate layer. So layer 2, we're going to record that we purchased 4 units at $36 a piece for a total cost of $144. And with that, we're good for August 5th. We can move on to August 15th, where we sell 4 of these units, and we're selling them at a sales price of $70 a piece. So on August 15th, we're going to sell 4 units. And I know it says $70 a piece, but that's not our cost of goods sold. That's our sales price. That's what we're selling it for. We don't have a spot on our record to record that. That's going to go in an entirely different journal entry to record our sales. What we need to figure out is what is our cost basis on these units that we are selling for $70 a piece. Depends on what method you're using. We're using the LIFO method, which means every time we sell a unit, we assume it's the last one that we purchased. So the newest units in inventory. Well, what's the newest units that we have in inventory? Those units that we bought on August 5th for $36 a piece, which means when we sell these 4 units of item number 153, we're going to assume that we're selling all 4 of the $36 units purchased on August 5th and record a total cost of goods sold of $144. After we make that sale, what's left in our inventory for navy blue fleece pullovers? Well, we had 2 $35 units. We haven't touched those. We had 4 $36 units, and we just sold all of those, which means all we have left in our inventory on hand for item number 153 are the 2 $35 units, giving us a total cost or valuation of $70. On to August 26th, where we're going to purchase an additional 12 units at $38 a piece. Well, let's put that in the purchases section. So we bought 12. They were $38 a piece. 12 times 38 means that had a total cost of $456. Again, now we have units with different unit costs, which means we need to layer our inventory. So for layer 1, let's bring down what we had before we made this purchase. We had 2 $35 units with a total cost of $70. And we just bought an additional 12 units at $38 a piece for a total cost of $456. That becomes our second layer of inventory. So now, after this purchase, we have 14 units total in inventory for item number 153, but they're at a different cost basis. We have 12 $38 units and 2 $35 units, and we have to track them separately because when we make another sale on August 31st, we're using the LIFO method. We're going to assume that we're selling the last units purchased first. So when we sell these 10 units at $70 a unit sales price, what's our cost of goods sold going to be? Well, it's assumed that we're selling the last ones that we purchased, and the last units that we purchased cost 38 bucks a piece. So we have 12 of those in inventory. We're going to sell 10 of those $38 units and record a total cost of goods sold on the sale of $380. What do we have left after the purchase? Well, we still have those two $35 pullovers in layer 1 with a total cost basis of $70. We had 12 $38 pullovers, but we just sold 10 of them, which means we only have 2 left at a $38 unit cost for a total cost of $76 for our second layer. And that is the end of the month for Kylo Fashions, which means we can record our totals for this particular inventory item. How many item number 153s did we purchase during the period? We bought 4 pullovers on August 5th. We bought 12 more on August 26th, which means in total for the period we bought 16 pullovers. The cost of the August 5th purchase was $144. The cost of the August 26th purchase was $456, which means the total cost of all of our purchases for navy blue fleece pullovers during the period was $600. Let's add up the columns. For cost of goods sold, we sold 4 units on August 15th. We sold an additional 10 units on August 31st, which means we sold 14 pullovers during the period. Our cost of goods sold recorded on the 15th was $144. On August 31st, we sold another $380 as our recorded cost of goods sold, which means we're going to have a total cost of goods sold for this inventory item during the period of $524. And that's how it works for the purchases and cost of goods sold sections. You just add up the total of the column for your quantity and total cost in these two sections. For inventory on hand, however, you don't want to sum up the whole entire column because that doesn't represent what you have on hand at the end of the period. What do they have on hand at the end of the period? Well, they have the 2 $35 pullovers and the 2 $38 pullovers, which means in total, at the end of the period, they have 4 navy blue fleece pullovers in inventory. And the total cost, the total valuation that we have for these remaining inventory on hand is 70 plus 76, or 146. So now we have all the information that we need during the period, which means we can record some journal entries. So let's bring over our perpetual inventory record for item number 153, and please keep in mind that whenever we made a sale, we sold them for $70 per pullover. Well, the first journal entry we would have had to record was on August 5th when we made this purchase of 4 units at $36 a piece. Let's assume there's no terms on this transaction to keep things simple. We bought $144 worth of inventory on account. What would the journal entry be to record that? We would debit merchandise inventory and we would credit accounts payable for $144, the total cost of the purchase. The next transaction we had occurred on August 15th when we made a sale of 4 units. You need 2 journal entries every time you make a sale in a retail business. The first one's going to record the revenues. So we sold 4 units. And we sold every pullover during the period at $70 per unit, which means if we're selling on account, we would debit accounts receivable for $280, the 4 units times the $70 sales price, and we would credit sales revenue for that same amount. First entry records the revenue. The second entry is going to record the expense. Well, what was our expense? It says on our chart on August 15th that we had a cost of goods sold of $144. So we would make the entry by debiting cost of goods sold for $144 and crediting merchandise inventory for that same $144. On August 26th, we purchased 12 units at $38 a piece for a total of $456. Doing so on account, we would debit merchandise inventory for $456. We would credit accounts payable for that same $456. We had another sale on August 31st. We're going to first record the revenue. We sold 10 units. We sold them at $70 a piece, which means our total sales would be $700. So we debit accounts receivable for $700, we credit sales revenue for $700. Then our second entry is going to record the expense. Our perpetual inventory record tells us that we had cost of goods sold using this LIFO method of $380 on the sale. So our entry would be a debit to cost of goods sold for $380 and a credit to merchandise inventory for $380 to record the cost of goods sold on the August 31st sale. And with this, we can figure out what Kylo Fashion's gross profit was for the period. We had two sales, and in the first one we recorded sales revenue of $280. In the second sale we recorded sales revenue of $700, which means we had total sales revenue during the period of $980. We subtract out our cost of goods sold from the two transactions, we're going to get our gross profit. What was our cost of goods sold? Well, on August 15th we recorded a cost of goods sold of $144. And on August 31st, we recorded a cost of goods sold of $380. So we recorded a total cost of goods sold related to item number 153, these navy blue fleece pullovers, of $524 during the period. And since revenue minus COGS gives you gross profit, we can do a quick calculation and figure out that using the LIFO method, Kylo Fashions would record a gross profit of $456 during the period.